Debt-to-equity ratio. The debt-to-equity ratio is a measure of the relationship between the capital contributed by creditors and the capital contributed by shareholders. It also shows the extent to which shareholders' equity can fulfill a company's obligations to creditors in the event of a liquidation. Here's the debt-to-equity ratio formula. Total debt divided by total equity. Let's look at an example. Here's some information about company XYZ. As you can see, short-term debt plus long-term debt equals $15 million for company XYZ. To calculate total shareholders' equity, we add common equity, preferred equity, additional paid-in capital, and retained earnings. In this example, total shareholders' equity equals $10 million. By using the debt-to-equity formula and the information we just reviewed, we can calculate using the formula that company XYZ's debt-to-equity ratio is 1.5 times, or 150%. This means that for every dollar of company XYZ owed by the shareholders, company XYZ owes $1.50 to creditors. It is important to note that the analyst's definition of debt may or may not include all short-term and long-term fixed obligations, including subordinated convertible debt, operating liabilities such as accounts payable and accrued liabilities and leases, contractual obligations, or other forms of financing that may not appear on the balance sheet. In general, a high debt-to-equity ratio indicates that a company may not be able to generate enough cash to satisfy its debt obligations. However, low debt-to-equity ratios may also indicate that a company is not taking advantage of the increased profits that financial leverage may bring. Investors usually prefer low debt-to-equity ratios because their interests are better protected in the event of a business decline. Thus, firms with high debt-to-equity ratios may not be able to attract additional capital. To view more definitions like this, please go to our newsletter section and sign up for our Term of the Day newsletter, a free email in your inbox every day giving you a new financial term to learn from.